But can you expand on the target percent net short? So can you expand on the percent net of short, excuse me, you're targeting, as you can have 1,000 shorts and still be net long? Yes. So he is absolutely correct. But at the same time, that percent net short, so it's kind of like a yes and no answer, to be perfectly honest. This is, again, just to reiterate the fact that not everything's going to have a specific rule, or like a specific kind of like rule or guideline that I can like share with you. I can give you kind of parameters and review with you, what Keith per se, what his max net short. So his max net short is a minus 25% net short, but that's going to vary, right? Vary on your risk tolerance, your risk parameters, your risk management, the investment policy that you might have on your account, or if you manage money for others, right? That's really going to differ, right? So somebody might have a minus 5% net short position because they really, they need to run things more, neutral, or at least, not net short. And then others might, like a Mike Taylor, for instance, I think he's commented on the weekly notebook review that he'll run, negative 60 to 80% net short, right? So it really does vary, and it really, kind of depends on the individual person and those kind of things. So what I'll kind of reiterate is, and really I've said this time and time again, it's January 13th today, right? 2023. Very early in terms of the season here, in terms of games played. There's a ton of time left on the clock. There's a lot of time, a lot of games left in the season, to use that analogy. So take a day, right? Take a weekend. We got a long weekend here in the US. Take a long weekend, take a week, a month to figure out your rules. It's really important to figure out your rules. If you're new, there's absolutely nothing wrong with waiting, watching, and building out your game plan. If you don't have a game plan, it is a much higher probability you are not going to succeed. So that game plan starts with fabricating your rules to construct a portfolio in alliance with your risk tolerance and goals, right? And unfortunately, I can't really provide, the details or, that type of information for each individual person, because, I gotta, from a advisory standpoint, it's the whole, know your client type thing, right? So from a compliance standpoint, et cetera, et cetera. But at the same time, yourself, your goals, what you're trying to accomplish either for your clients, if you're an advisor, or what you're trying to achieve as an individual. So spend time building out that game plan, so that you can position your portfolio and make decisions within the risk ranges, within the signals, within the quad environment to make that a reality and to have success, right? So I really encourage everybody to just take a step back. If you're finding that you're kind of, if you're finding that you're sitting here and you're either, coach said he was minus 12.1% net short this morning. So if you're kind of in line with that, because you follow Keith's kind of general guidance, then brilliant. If you're greater than that, assess maybe why. Why did you make those decisions? Another good thing to do, good practice is journaling. So journal those decision making. Why did you get to maybe minus 15% net short or minus 20, right? And just assess. There's also nothing wrong with, if you find that you are a little oversized for your comfort, right? Then, or you're leaning more net short, or you're not net short enough, let's just say, right? You can always fix that, right? We do preach, or Keith certainly reiterates, sell on green, and or when you're shorting, right? So sell on green. Well, I guess it really doesn't matter. Sell on green and buy on red. But if something has moved a little bit lower, but is maybe, so in case of shorting, if it's down on the day, not quite green, doesn't mean that you can't press it, or you can't like add to that position just because it's down. Same thing with something going up. And that's going to kind of talk, I'm going to talk a little bit about in this next question, but, something's moving higher on you, sometimes you do have to, quote, pay up for that asset, right? In order to get a better position sizing inside the portfolio for what you're trying to accomplish. So again, I'm just going to reiterate this last piece. Hedgeye is not a get-rich-quick scheme. It's a preserve your hard-earned capital and compound it over time type of investment process. So if that's not for you, then we're not likely going to be for you. We got the RTAs and all that kind of stuff, in terms of kind of the managing the more immediate term action that we're seeing out in the marketplace. But at the end of the day, we are a sneaky long-term investor. We try to capture the full cycle investing process, right? So just want to reiterate that, right? So this is not a get rich quick scheme. We are here for the long haul. We're here to compound it, to allow your families to succeed in the long term.